Tesla stock is back in the news and it's looking like it's on the come up. But what does this actually mean?
We can talk about Tesla because it is up 24% in a week.
Tesla's second quarter delivery numbers are out right now as we've been tracking shares of TSLA.
It's a volatile name, so I want to stick with this game plan, make sure that we weather the volatility to come.
Cathie Wood's ETF and ARK Invest have unloaded Tesla shares as it's drastically pushed up over the past couple days. Now, does this mean the stock is going to crash and Cathie Wood's has suddenly gone bearish? Most likely not. But let's go ahead and let's take a look at this. First, here we can see that Cathie Wood's ETF has actually sold Tesla stock for the first time in 9 months. Now, if we go ahead and we look at this here, you can see ARKW, which is the ETF, unloaded shares right here, and then ARK, which is the actual investment fund, unloaded shares there as well. And the total unloading of all these shares accumulated to 14.5 million, and she unloaded this all amid this rally that's happening right now with the Tesla stock. Now, if we go ahead and we look at their portfolio, you can see that they unloaded a bunch of Tesla stock, but then they also went ahead and they loaded up on some other stocks here. So you can see Pacific Bioscience, Archer Aviation, Intelia Therapeutics, Recursion Pharmaceuticals. So they are loading up on some other stocks that could be some potential stocks that you'd want to look for when going and reevaluating how you want to structure your portfolio. Now, when it comes to why she actually went through and unloaded these stocks, there actually are some key points as to why she would have done this. And we're going to go ahead and we're going to take a look at these. So when we go ahead and we look at the Tesla stock chart, one of the key points, one of the most important points here, something that most analysts will be able to notice, is that when it comes to Tesla stock, there is a very key level that it has been rejected on several times. And we're not just talking several times in a month or within a year. This is several times over the past 4 years. So if we go ahead and we look at this stock, you can see right here, starting back in August of 2020, we hit that high point coming into August and then September. And then we had this high point that ended up turning into a bearish trend. So you can see it ended up pushing up right here in 2021, then pushing up again in 2022, and then pushing up again just at the end of 2022 before we had this come down. And now we're back at this point right here where we're hitting this key level within this bearish trend. Now, does this mean that we're going to continue on the trend, or does this mean we're going to go bullish? As of right now, it doesn't mean either. If you go ahead and you look at the trend, all we have right now is a break of trend. We don't have any indication of a bearish continuation, and we don't have any indication of a transition over to a bullish trend line. We only have the break. And when you go ahead and you look at this break on a lower time frame, you can kind of start to see why they may not want to continue to hold an entire position in Tesla stock. Now, if you look at this from a big picture perspective, Cathie Wood's ETF and her ARK investment didn't just dump Tesla and write it off as a bearish stock. Instead, what they're most likely doing is just trimming a little bit off their portfolio. And the reasoning behind why they would be trimming from their portfolio with the Tesla stock does make sense. If we go ahead and we look at this, you can see starting back in August, just the end of August in 2024, we can go ahead and we can take a look at this. You can see just from August, we've already pushed up to a high point right now, up 32% in the past 7 days. Now, this is a massive rally and it is based off Q2 delivery reports, but is that actually substantial information to indicate a rally of this size? I personally don't think so. So if we go ahead and we take a look at some other things, you're going to be able to see that Tesla's Q2 delivery report was actually very good. So they ended up delivering 443,000 vehicles and they produced 410,000 vehicles, which was very good, but it all comes down to comparison. So this was very good comparably to what? And when you look at what it's compared to, it's actually compared to Q1 delivery reports. If we go ahead and we look at their Q1 delivery reports, you're going to be able to see that there was actually a massive drawback. So we had the Q4 delivery reports of 484,000 And then we had the delivery reports for Q1 of 2024 that only came in at 386,000. Now, this delivery report was the lowest quarterly delivery report since Q2 2022, where they had some of the worst delivery reports due to several factors, including factory issues. Now, when you look at a stock like Tesla stock, you don't just want to look at it from the stock's perspective, you want to look at it from a market perspective as well to kind of give you a big picture of why the stock would move a certain way, not just based on what's happening with the stock specifically. Now, if we go ahead and we look at something called the SOFR, which stands for Secure Overnight Financing Rate, you're going to see some data come in that is a little bit concerning when it comes to companies, not only Tesla. And this is going to indicate to you that we are seeing a little bit more tightness in the amount of money that is being lent out. There's a little bit more stiffness going on there, and the banks seem to be holding on to that money a little bit more. You can see right now on the 2nd of July, we're sitting at a 5.35. And I know you may be looking at that in terms of what's happened over the past year here and saying that's actually not that bad. Like, we were sitting around a 5.32, then we hit a couple higher points at 5.34, and now we're at 5.35, which is actually down from a 5.4. But the thing about this is the overnight US funding rate hits its highest since January. Now, this is something that is concerning because when it's hitting these high amounts, that means that the borrowing of money from banks is going to become a little bit tighter. It's going to become a little bit more difficult. And as you can see here, the SOFR rate has hit its highest level since January 2nd, and that indicates a sign of dwindling liquidity. Now, of course, we're not just going to take that. We're also going to couple that with the 10-year Treasury yields, which, if you look at it, we had this little spike that happened right here. This is a spike that just happened back in June, and as we come into July, you can see it's kind of coming down a little bit. Looking at a chart this far out with the year, it doesn't look that concerning. It's just a little spike. It's nothing that big. But if we actually go ahead and we zoom in a little bit, you're going to see this was actually quite a big spike up that happened quite fast. You can see starting at the 17th of June, we were down here, and now all of a sudden at the end of June, we're way up there. So it did spike quite fast, and that can indicate some issues within the way that money is being moved around. Less investment into the companies, which means less that the companies can use to build out their infrastructure and build out potentially new products, which is something that Tesla really needs to do. But as of right now, we only have this break of trend right now, and we have pushed up substantially. Now, if it were to continue to push, you got to understand this isn't a bullish trend yet. This is only break of trend, and typically when you get a break of trend, it's gonna come back down and retest some lows, indicating that we are now transitioning to a bullish trend. So this is something that you're gonna want to watch for if you do have Tesla stock within your portfolio, and do something similar and go ahead and trim a little bit off your portfolio and wait for that confirmation of bullish trend actually building out until you continue to invest in the stock. Of course, that is something that you have to decide, but based on what Cathie Wood's doing, that kind of seems like what they're doing. They're just doing a little bit of trimming. They're not actually going bearish on Tesla stock. I hope this video really helped you all out, and I'm excited to see you all in the next one.